Hello guys, welcome back to Aditya Financial Insight. NISM सीरीज 15 रिसर्च एनालिसिस कोर्स में आपका स्वागत है गाइस। तो आज हम इंट्रोडक्शन ऑफ सिक्योरिटी मार्केट के चैप्टर नंबर 2 सेकेंड लेक्चर में देखेंगे। इक्विटी लिंक्ड डिवेंचर। इक्विटी लिंक्ड डिवेंचर में क्या क्या पढ़ने को देखते हैं। फिर सबसे पहले तो गाइस इक्विटी लिंक्ड डिवेंचर are floating rate debt instrument whose interest is based on the return of the underlying equity assets such as Nifty 50, S&P/X, Sensex, and individual stocks or any customized basket of individual stock. The issue of bond invest a predetermined part of the principal amount collected in fixed income security like bonds, which provide principal protection, while the balance is used to buy options, which provide the exposure to return of equity. Thus, these instruments are generally structured in a way to give full capital protection with a provision for equity participation to the investor. Capital protection should not be ready as non-existence of credit risk of default by the user. These instruments still carry credit risk and accordingly rated by the credit rating agency. तो देख सकते हैं इक्विटी लिंक डिवेंचर में हम लोग इक्विटी एसेट निफ्टी 50 S&P है, इंडिविजुअल स्टॉक कस्टमाइज बास्केट इंडिविजुअल पर पढ़ते हैं, जो कि इसमें कैपिटल प्रोटेक्शन नोट बी रीड एज नॉन एग्जिस्टिंग क्रेडिट रिस्क इशू द इंस्ट्रूमेंट स्टिल कैरी क्रेडिट रिस्क अकॉर्डिंग टू द रेट बाय द क्रेडिट रेटिंग एजेंसी। तो इसमें है जो क्रेडिट रेटिंग एजेंसी के अनुसार इसमें क्रेडिट रिस्क का जो रेटिंग दिया जाता है उसके बारे में होता लिंक्ड होता है डिवेंचर, मतलब उससे रिलेटेड जो भी एजेंसियां होती है। तो कॉमोडिटी लिंक्ड डिवेंचर में हम क्या आते हैं, जस्ट लाइक ELDS, CLDS आर फ्लोटिंग रेट डेब्ट इंस्ट्रूमेंट हुज इंटरेस्ट is based on the return of the underlying commodity asset. While the return can be linked to any commodity, most of these papers globally are linked to precious metals, gold, silver, like ELDS. Advantage of CLDS is that the way provided the investor opportunity to earn return from commodity market while the protecting their initial capital. तो गाइस जिस तरह का इक्विटी लिंक डिवेंचर होता है उसी तरह कमोडिटी लिंक डिवेंचर, जिसमें कमोडिटी मार्केट से आपका जो रिटर्न होता है कमोडिटी एसेट पे, उसी को जो प्रोटेक्शन इनिशियल कैपिटल होता है उस पर हम देखते हैं। अब इसमें आ जाते हैं गाइस मॉर्गेज बैक्ड सिक्योरिटी एंड एसेट बैक्ड सिक्योरिटी। मॉर्गेज बैक्ड सिक्योरिटी एंड एसेट बैक्ड सिक्योरिटी आर डेब्ट इंस्ट्रूमेंट issued by the institution against the receivable and cash flow from financial assets such as home loan, auto loan, rent receivable, credit card receivable, and others. The cash flow acquiring from the asset are used to meet the interest and principal repayment obligation on the bond issue. The issue is able to create liquidity in an otherwise illiquid asset by scrutinizing them. The instruments are credit rated and may be listed on a stock exchange. The financial innovation is a continuous process and new products keep hitting financial market on day-to-day basis. REITs and investments. Real estate investment trust and infrastructure investment trust are investment vehicles that pull money from various investors and invest in revenue generating real estate projects and infrastructure projects respectively. As the name indicates, these vehicles are formed as a trust. They issue units to the investor to raise money. They enjoy favorable tax treatment as long as they meet the necessary regulatory requirement. Regulation stipulates the minimum amount of assets that have to held in the form of revenue generating asset. In the case of REITs, 80% of the assets should be held in the form of real estate asset. Similarly, for the investment, regulation stipulates that 90% of the unit capital should be invested in revenue generating infrastructure project. These assets can be held directly or through a special purpose vehicle. In the case of both rights and invest, the trust has to distribute at least 90% of the distributable surplus cash flow to the unit holders. Commodity commodity में क्या क्या देखते हैं guys? Commodity are the basic materials or goods that are largely homogeneous in nature. These goods are interchangeable with other goods of the same type. Thus, a bar of gold commodity, while a jewelry made of the gold is not commodity. This is because an investor would be indifferent to different bars of gold as long as quantity and quality remain same. However, the case of jewel, the buyer may prefer one design over another even though their weight and quality may be same. Commodity may be hard or soft. Hard commodity are essentially natural resources that are mined or extracted. This includes all types of metal, crude oil. Soft commodity, on the other hand, refers to commodity that are grown agriculture products. Soft commodity include grains and pulses. Commodity are largely trade goods that are meant for use in production of goods or for consumption. Since inflation and price of commodity are directly related, investing in commodity can help protect real value of investment. However, most of the commodity involves huge storage costs and thus not suitable investment. Having said that, there are certain avenues available to invest in commodities. Precious metal, precious metals such as gold, silvers are viewed as an investment that can help preserve real value of money. Unlike many other commodities that have short life, these precious metals have very long life. Further, storage cost on these metals is very small compared to their value. These characteristics make precious metal a viable investment option. Commodity ETF में क्या है? Commodity ETF is an exchange fund that invests in pooled investment in a range of physical commodity. Investors can invest in commodity ETF by buying the units of fund. The value of the units largely move in the line with the net asset value of the fund, which in turn move in line with the commodity price. Since the storage is handled by the fund, the investor do not have any storage obligation. Although commodity ETFs can be created for any set commodity, gold ETFs are most common commodity ETF products as they are easy to store and manage for the funds. Manage future contract. Manage future contract. Future contract is a contract to buy or sell asset at a specified future date at a specific price. Since the price of contract is predetermined, the buyer of the contract tend to gain if the price of the product increase in future. Reverse is also true. Thus, an investor can gain out price rise without buying the product. Managed future contracts refers to a portfolio of future contracts that are actively managed by professionals instead of buying the actual underlying asset. The investment managers take position in future contracts. Investor can thus invest in commodity through the managed commodity future contract. Warehouse receipt. Warehouse receipt में क्या है? Warehouse receipt is a document that show proof of ownership of goods that are stored in warehouse. Most of these warehouse receipts negotiable. Thus, the title to understand goods can be transferred by simply transferring the receipt. The structure of security market. The market in which securities are issued, purchased by the investors, and subsequently transferred among the investors is called security market. This security market has two interdependent and inseparable segments. Primary market. The primary market, also called new issue market, is where the issue raise capital by issuing security to investor. Fresh security are issued by the in this market. Secondary market. The secondary market facilitates trade in already issued security, thereby enabling investor to exit from an investment or new investor to buy already existing securities. The primary market facility create to financial asset. Secondary market facilitate their marketability, tradability, which makes these two segments of financial market interdependent and inseparable. We shall look at each of the market in details in the next section. Way to issue security. Way to issue securities. Primary market. As states above, primary market is issued by the company issuer for the raising fresh capital from the investor. Primary market offering may be public offering or an offer to select group of investors in private placement program. The share offered may be new share issued by the company or it may be an offer for sale where an existing larger investor and investors or promoter offer a portion of their holding to public. Let us understand various terms in the primary market. Public issue security are issued to the member of the public and any eligible to invest can participate in issue. This is a primary real issue of the securities. Initial public offer. An initial public offer of share IPO, the first sales of corporate for common shares investor at large. The main purpose of IPO is raise equity capital for the future growth of the business. Eligibility criteria for raising capital from the public investor is defined by the SEBI in its regulator and including minimum requirement for the net tangible asset, profitability and net worth. SEBI regulation also impose timeline within which the security must be issued and others requirements such as mandatory listing of the shares on a nationwide stock exchange and offering the share of dematerialization form. SEBI regulation also specific the portion of the shares to be allocated to different class of shareholders. According to it, in an eligible issue, at least 35% shares should be allocated to retailers, investors investing less than or equal to 2 lakh in the issue, while the utmost 50% can be allocated to qualified institutional investors. Other investors can be issued the balance. In 2009, SEBI also introduced the concept of anchor investor. Anchor investor means a qualified institutional buyer who make an application for a value of 10 crore rupees or more in public issue made through the book building process. Anchor investor can be allocated up to 60% of the portion allocated to QIB, qualified institutional bidding for the open one day before the IPO open for public subscription. However, the allocation price for anchor investor can be lower than the financial issue price determined through the book building process. The volume and value of anchor subscription serves as an indicator of quality of the offer. Follow on public offer FPO. Follow on public offer when an already listed company make either a fresh issue of security to public on offer of sales to public, it is called FPO. When a company wants additional capital for growth and desire to redo its capital structure by the retail depth, it raise equity capital through a fresh issue of the capital in follow offer. A follow on public offer may also be through an offer for sales, which usually happens when it is necessary to increase the public shareholding in the company to meet regulatory requirement. Private placement क्या है? It refers to issue large quantity of shares to select set of investors according to Company Act 2023. The number of investors to whom shares are issued under private placement should not exceed 50. Private placement can be in the form of qualified institutional placement QIP for the preferential allotment. Qualified institutional placement is a private placement of share made by listed company to certain defined category of the investor known as qualified institutional buyer. Qualified institutional buyer include financial institution, mutual fund, and bank, among others. SEBI has defined the eligibility criterion for the corporate to be able to raise capital through QIP and others term of issuance under QIP such as quantum and pricing etc. Preferential issue. Preferential issue means an issue of the specified security by a listed issue to any selected person or group of person on a private placement basis and does not include an offer of a specified security made through a public issue, right issue, bonus issue, employee a stock option scheme, employee stock purchase scheme, or qualified institutional placement, or an issue of the suite equity shares or depository receipt issue in a country outside India or foreign security. The issuer is required to comply with the various provisions defined by the SEBI, which ally including pricing, disclosure, notice, look in addition to the requirement of specified in Company Act 2023. The requirement of SEBI regulation with respect to public issue do not apply to a private placement. A privately placed security can be listed on a stock exchange provided it meets the listing requirement of SEBI and a stock exchange. Private placement of security can be done by a company respective of whatever it has made a public offer of share or not. Right and bond issue. Rights and bond issue. Security are issued to existing shareholder of a company as on a specific cut-off date, enabling them to buy more security at a specific price in case of right or without any consideration. In case of bonus, both right and bonus share are offered in a particular ratio to the number of security held by investor as an record date. An investor who has been awarded right shares has three options: exercise the right, transfer the right to another investor, and let the right lapse. Do not do nothing. On the other hand, in case of bonus, additional shares are conferred on to existing shareholders without any consideration. In lieu of dividends, company can issue bonus share only if they have sufficient amount of retained earning. When a bonus issue is made, an amount equivalent to the value of these shares issued should be transferred from retained earnings to share capital. Onshore and offshore offering. While raising capital, issue can either issue the security in the domestic market, raise capital or approach investor outside the country. If capital is raised from domestic market, it is called onshore offshoring. If the capital is raised from the investor outside the country, it termed as offshore offering. Offer for sale (OFS) and offer for sales is a form of share sale where the share offered in an IPO or FPO are not fresh share issue by the company, but an offer by existing shareholder to sell shares that have already have been allotted to them. An OFS does not result in increase in the share capital of the company since there is no fresh issue of the shares. The proceeds from the offer go to the offers who may be promoter or other large investor. Sorry, the disinvestment program of the government of India, where the government offers share held by the public sector undertaking, is an example of OFS. It may be stated that OFS is secondary market transaction done through the primary market route. Sweet equity क्या है? Sweet equity under the section 54 Company Act 2023, company may issue share to its employee, promoter, technocrat, and others as reward for their contribution to the company. These shares are referred as sweet equity. The purpose of issuing the share is to motivate employee and top management or any other recipient to work in the interest of the company. It helps reduce the agency risk arising on account of separation of management and ownership. Although the main purpose of sweet equity is not a raise capital. Transactional does involve issuing new shares. Employee stock option scheme, yeah, USOPs are instruments given by the company to its employee that give them an option to buy shares of the company at a predetermined price after a period of time refer and vesting periods. Typically, the vesting period is more than 1 year and company many stipulate additional conditions for investing like sweet equity. The objective of issuing USOP is to motivate employee to work in interest of the company. These employees are gained only if company's share price rise above the exercise price and option. The company will have to issue shares if the employee choose the exercise option. Secondary market. While the primary market is used by the user for raising fresh capital from the investor through the issue of security, the secondary market provided liquid to this instrument and activity. Secondary market promotes the growth of the primary market capital formation since the investor in the primary market are assured of the continuous market where they have an option to liquidate exit their investment. Thus, in the primary market, the issuers have direct contact with the investor, while in the secondary market, dealing are between the investor and issuers do not come into picture. Secondary market can be broadly divided into two segments. Over the counter market. Over the counter market are the market where the trades are directly negotiated between two or more counterparts. In this type of market, securities are traded and settled over the counter among the counterparty directly. Exchange trade market. Exchange trade market क्या होता है? The other option that are trading in security is through the stock exchange routes, where the trading and settlement is done through the stock exchange. The trade executed on the exchange are settled through the clearing corporation, which act as counterpart and guarantees the settlement of the trade to both buyer and sellers. Trading क्या है? A formal contract buy or sell security is termed as trading. As defined above, trading can be done either in the over-the-counter market of exchange trade market, a stock exchange, the Indian future, and electronic order matching system that facilitate efficient and speedy execution of the trade. Clearing settlement क्या है? Clearing and settlement are post-trade activity that constitute the core part of equity trade life cycle. Clearing activity is all about the ascertaining the net obligation of the buyers and seller for a specific time period, and settlement is the next step for the settling obligation by the delivering shares and paying money by the buyers. While OTC transactions are settled directly between the counterpart, clearing corporation is the entity through which settlement of security takes place for all trade done by the stock exchange. The details of all transactions performed by the stocks broker are made available to the clearing house by the stock exchange. The clearing house gives an obligation report to broker and custodians who are required to settle their money or security obligation within the specific deadline, failing which they are required to pay penalties. In practice, the clearing corporation provides full novation of the contract between buyer and sellers, which means it acts buyer to every seller and seller to every buyer. As a result, country part risk sustainability reduced for the investors. Risk management क्या है? In OTC transaction, counterparty are expected to take care of the carry risk on their own. In exchange trade world, clearing corporation as defined above the given settlement guarantee for trade to the counterparty. All buyer and seller they expose the clearing corporation to the risk of default by the buyers and seller. To handle this risk, clearing corporation charge various kinds of Most prominent among these margin are initial or upfront margin, peak margin, and markup market margin. Initially, margin is a percentage of transaction value arrived at a base of concept of value at risk philosophy, and marked market margin is the national notational loss which an outstanding trade is settled during the specified period on account of price movement. Various market participants and their activity. Various market participation their activity में क्या देखते हैं? Market participants in security market including buyer and seller, buyer intermediary between the buyer and seller. Some of the entities are defined in the brief here. Market intermediary, a stock exchange. A stock exchange provided a trading platform where the buyer and seller can transact in already issued security. A stocks market such as NSE, BSE, MSCI are nationwide stock exchange. Trading happen on these exchanges through the electronic trading terminals, which feature enormous order matching. A stock exchange also appoint clearing and settlement agency and clearing bank which manage these fund security settlement that arise out of the trade. Depositories. Depositories are the institutions that hold security like shares, debentures, bonds, government security, mutual fund of the investor in electronic form. Investors open an account with the depository through the registered depository participants. They also provide service related to the transaction in security held dematerialized from currently there are two depositories in India that are registered by SEBI. With the SEBI, CDSL, Central Depository Service Limited, and NSDL, National Security Depository Limited. Depository participant. A depository participant is an agent to depository through which it interferes with an investor and provide a depository service. Depository participants enable investor to hold and transact in security that depend live from, while the investor level accounts in security are held maintained by the DP. Company level account of security issued by the held maintained by the depository. Depository participants are appointed by the depository with approval of SEBI. Public financial institution, scheduled commercial bank or regional bank operating in India with the approval of Reserve Bank of India, a state financial corporation, custodian stock broker, clearing corporation, clearing house, NBFC, and registered to an issue share transfer agent company with the requirement prescribed by the SEBI can be registered as a DP. ट्रेडिंग मेंबर क्या है? ट्रेडिंग मेंबर और स्टॉक ब्रोकर are registered member of a stock exchange. They facilitate buy or sell transaction on investor stock exchange. All secondary market transaction on the stock exchange have to be essential conduct through the registered broker of the stock exchange. Trading member can be individual, sole proprietary, partnership, firm, and corporate body who are permitted to become member of recognized stock exchange subject to fulfillment minimum prudential requirement. Authorized person. Authorized person is an person, individual, participant, partnership, firm, LLP, or body corporation who is appointed by a stockbroker or trading member as an agent to reach out to the investor scattered across the country. A stockbroker may appoint one or more authorized person after obtaining a specific prior approval from the stock exchange concerned for each such person. The approval as well as the appointment authorized person before a specific segment of the exchange. SEBI had earlier allowed spread of sub-brokership as well as authorized person network to expand the broker network. However, SEBI board design meeting held on June 21, 2020 decided that the sub-brokers as an intermediary shall cease to exist with the effect of April 1, 2019. All existing sub-brokers would migrate to become authorized person or trading member if the sub-brokers meet the eligibility criteria prescribed under stock exchange by laws and SEBI regulation. and by complying with these regulations. A custodian is an entity that is charged with the responsibility of holding funds and security of its large client, typically institutions such as bank, insurance company, and foreign portfolio investor. Besides safeguarding securities, a custodian also settles transactions in these securities and keep track of corporation action on behalf of its client. It helps in maintaining a client security and fund account, collecting the benefit or right to accurating the client in respect of security held, keeping the client informed of the action taken out to their portfolio. Clearing corporation play an important role and safeguarding the interest of investor in the security market. Clearing agency ensure that the member on the stock exchange meet their obligation to the delivery funds security. This agency act as a legal counterpart to all trade and guarantee settlement of all transactions on a stock exchange. It can be part of an exchange or separately entities. Clearing banks act as an important intermediary between clearing member and the clearing corporation. Every clearing member need to maintain an account with the clearing bank. It is an clearing member responsibility to make sure that the funds are available in its account with the clearing bank on the day of pay into the meet the obligation arise out of the trade executed on a stock exchange. In case of payout, the clearing member receive the amount of their account with clearing bank on payout day. Merchant bankers. Merchant bankers are entities registered with the SEBI and act as issue managers, investment bankers, or lead managers. They help an issuer access the security market within an issuance of the security. They are a single point contact for the issuers during a new issue of security. They evaluate the capital needs of issuers structure, appropriate instrument, get involved in pricing and instrument, and manage the entity issue process until the security are issued and listed on the stock exchange. They engage and coordinate with other intermediaries such as registered brokers, bankers, underwriters, and credit rating agency in the managing the issue process. Underwriters क्या है? Underwriters are the intermediary in the primary market who undertake to subscribe any portion of the public offer security which may not be bought by the investors. They serve an important function in the primary market, providing the issuers the comfort that if the security being offered to public do not elect the desired demand from the investors, the underwriters will steps in and buy the securities. When the underwriters make the commodity at the initial stage of the IPO, it is called hard underwriting. Soft underwriting is commitment given once the price is determined. The shares that develop usually placed with other financial institutions, thereby limiting the risk to the underwriter. Soft underwriting also comes with a clause that provides the option to exit from the commitment in the event soon certain event occurring. Institutional participants. Yeah, institutional participants. An investor is backbone of the security market in any economy as the one leading surplus resource to a company for their productivity activity. Investors in security market can be broadly classified into retailer investor and institutional investor. Institutional investors comprise domestic financial institutions, bank, insurance company, mutual fund, foreign portfolio investors. Some of them are defined here in brief. Foreign portfolio investor (FPI). A foreign portfolio investor is an equity entity established or incorporated outside of India that propose to make investment in India. They International investors must register with the Regulatory Security Exchange Board of India to participate in the Indian security market. P-note participation क्या है? Participatory notes are instrument issued by the SEBI registered foreign portfolio investment to overseas investors who wish to invest in Indian stock market without registering themselves with the Market Regulatory Security Exchange Board of India. P-notes provides access of Indian security to these investors. Mutual fund क्या? A mutual fund is a professional managed collective investment scheme that pulls money from many investors to purchase security on their behalf. Mutual fund company invest the pooled money in a stock, bond, and other securities depending upon the investment objective of the scheme, which is set upfront. A fund manager, with the help of researchers team, takes all the major decisions in terms of company to invest in percentage of each stocks in the portfolio when to exist and so on. Each investor owns units which represent a portion of the holding of the funds. Diversification of the investment is an important aspect of mutual fund investing. It helps in reducing the risk in investment for the investors. As a result, the investor is less likely to lose money on all the investment at the same times. Insurance company क्या है? Insurance company a crore business into insure asset depending on the types of asset that are insured. There are various insurance company like life insurance, general insurance. These companies have huge corpus. They are one of the most important investors in the Indian economy by investing equity investment, government securities, and other bonds like mutual fund. Each insurance company also has designed people who responsible for investment decision. Pension fund क्या है? A funds established to facilitate and organize the investment of the retirement fund contributed by the employee and employer or even only the employee. In some cases, the pension funds is a common asset pool meant to generate a stable growth over the long term, provides a retirement income for the employee. Pension funds are commonly run by the financial intermediary from the company and its employee, although some larger corporations operate their pension fund in-house. Pension funds control relatively large amount of capital and are some largest institutional investors. Venture capital fund. A venture capital fund refers to a pooled investment vehicle like mutual fund, but with mandate to invest money enterprises that are earlier stage of the development but with the potential of long-term growth. The longer gestation period, higher risk of failure make it difficult to such a company to access conventional source of the finance such as bank and the capital market. Venture capitalists bringing managerial and technical expertise as well along with the capital their investment company. Private equity firm क्या private equity firm? Private equity is a term used to define funding available to company in the earlier stage of the growth. Expansion or buyouts invest company may be privately held or publicly traded company. The term private equity includes venture capital fund. The fund is contributed by the investor called limited partners and invested and managed by the general partners. Some of the private equity funds are specialized funds with the competence in the particular industry stage of the company. Targeted deals such as funding, buyout. Hedge fund क्या है? Hedge fund A hedge fund is an investment vehicle that pool capital from a number of investors and invest that across the asset, across the product, across the geographics. These funds managers generally have very wide mandate to generate return on the investment capital. They hunt for the opportunity to make money for the investor wherever possible. In that sense, actually Term hedge fund is misnomer, as this fund may not necessarily buy the hedges. Alternative investment fund. These are the privately pooled investment schemes that invest in various asset classes such as real estate, private company, commodities such as other alternative investment assets. The term alternative typically includes all other assets excluding listed equities, fixed income instrument, fixed deposit, a collective investment scheme, or investment platform such as mutual fund, NPS, insurance plan that invest in the asset. In India, alternative investment fund as defined in Regulation 21B for the Securities and Exchange Board of India Alternative Investment Fund Regulation 2012. It refers to any privately pooled investment fund, whether from Indian or foreign source, in the form of trust or a company or body corporate limited liability partnership, which are not presently covered by any regulation of SEBI governing funding management, like regulation governing mutual fund or collectively investment scheme, nor coming under the directly regulation of any other sectorial regulation in the India, RIDA, PFRDA, RBI, etc. SEBI categorized AIF into three categories. Category 1, AIF. This refers to AIF which invest in a startup, earlier stage venture or social venture or SME infrastructure, other sectors, area which the government or regulatory consider as socially economically desirable. These include venture capital fund, including angel fund, semi funds, venture fund, infrastructure fund, etc. Category 2, AIF. This refers to those that use complex investment strategies including use of leverage and derivatives. Hedge fund, PP, PIPE funds are registered as a category of third AIF. Category second AIF. AIF which do not fall in category 1 and category third, which do not undertaking leverage or borrower other than to meet day-to-day operational requirement, are categorized under the category second AIF. Various types of funds such as real estate fund, private equity fund, fund for distressed asset, etc. registered by category second AIF. सेकेंड AIF है गाइस जो कि फर्स्ट एंड थर्ड में नहीं होगा, ये सिर्फ सेकेंड में होगा. इन्वेस्टमेंट एडवाइजर वर्क विद द इन्वेस्टमेंट टू हेल्प देम डिसाइड टू on asset location and make a choice of investment based on the assessment of their needs and time horizon return. Expectation and ability to break risk. They may also be involved in creating financial plans for the investors, where they help investors to define their financial goals, purpose, appropriate saving and investment strategy to meet these goals. Employee Provident Fund क्या है? EPF. EPF is a scheme that used to provide retirement benefit in the from the defined benefit scheme to employee of covered organization. Every employer is obligated to provide 12% of basic salary in contribution to the scheme and equal amount of deduction from the employer's salary. The funds are deposited with Employee Provident Fund (EPFO), which administered manage their fund. The fund pay predetermined rate of interest decided yearly to the beneficiary. This fund invests in debt instrument and equity instrument, but employees do not have any say in investment or asset location of the fund. तो गाइस ईपीएफ है जो 12% ऑफ बेसिक सैलरी का इसमें इन्वेस्टमेंट होता है हर एक मंथ. नेशनल पेंशन स्कीम के एनपीएस. दिस इज ए गवर्नमेंट स्पॉन्सर्ड रिटायरमेंट स्कीम. Subscribers contribute regularly to the scheme, and on maturity, the fund accumulated in the scheme can be used to buy annuity products. Subscriber will also have the option to partially withdraw the fund at the maturity. Corporate NPS scheme can offered by the employer in addition to the other retirement benefit scheme. NPS offer various choices of fund, and beneficiaries can route it to fund their choice. फैमिली ऑफिस क्या है? फैमिली ऑफिस refers to an organization that handles the wealth of wealthy family. They typically take care of all aspects of financial management of the family, including investment, estate planning, tax planning. They also take care of the other activities such as day-to-day accounting of the family income, expense, handling payment to the vendors, household staff. There are singles family office, there are multi-family office. Multi-family office handle the financial for the multiple family. Corporate treasury में क्या है पढ़ाई देखते हैं. Corporate company and other business organization may have surplus fund which they intended to use potential further opportunity or meet further obligation. The organization would gain if the funds are temporarily invested rather than to let it be ideal in their bank's current account. Large corporates have a separate treasury team that handle which investment of surplus fund in case of other business such as private limited company, partnership firm. This activity may be handled by the regular financial team. Corporate treasury, on account of their large size, gets opportunity to invest in many different types of security. A small business, however, mostly park their funds through the mutual fund. Retailer participants क्या है? Retailer investors include individual investors who buy and sell security for their personal accounts and not for other company organization. HNI or high net worth individual and UHNS ultra high net worth individual are individual investors who invest large sum of the money in the market. Reserve Bank of India has also granted general permission to non-resident Indian (NRI) to person of Indian origin (PIE) qualified for regional investors for undertaking directly investment in Indian company under the automatic route. Proxy advisory service firm क्या है? Proxy advisory service investors in relation to exercise their right in the company, including the recommendation of public offer or voting recommendation on agenda items. And investors may not be able to track shareholder announcement for all their investee company or analyze each of the proposal in depth. The service of proxy advisory add value to them. Proxy advisors analyze voting proposal and how it affects the interest their investors and eventually suggested how they should vote. Proxy advisory are typically engaged by the institutional investor to advise them on matters that come from voting. Kinds of transaction. Kinds of transaction क्या है? We may undertaking several kinds of transaction in the security market, ranging from the immediate settlement to the distance settlement. Transaction type also vary based on transaction in the stocks market or outside the stock market called OTC trade. A brief description about the different kinds of transaction is given below. Cash, term, spot trade and transaction. Cash trade क्या है? Cash trade are the trades where the settlement, payment and delivery occurs on the same trading day. T plus 0 where a 0 defines a time gap in a day between the trade day and settlement day. Cash trades in financial market are unusual as most contracts are settled between 2 or 3 days from that day. Trade to the Indian Stock Exchange have gradually started moving for all stocks into T plus 1 settlement cycle. However, we see cash transaction in our normal day today life all the time when we buy grocery, vegetables, fruits from the market. Term trade क्या है? Term trades are traders where the settlement, payment and delivery occurs on the day next to the trading day T plus 1 where the one defined as a time gap in a day between the trade and settlement day. Some of the transaction in foreign exchange market affects market settlement of T plus 1 basis. A spot trade क्या है? A spot trader are traders where the settlement, payment and delivery occurs on the spot day, which is normally 2 business days after the trade. Equity market in India offer spot trade FX market globally by the default offer spot transaction in the foreign exchange. Forward transaction, guys. Forward contract are contractual agreement between two parties, buy or sell underlying asset, a certain future others for a particular price that decided on the date of contract. Both the contracting parties committed and large obligated owners to transaction respective of price of the underlying asset at the time of settlement. Since forward are negotiated between two parties, in the term of condition contract are customized. These over the counter contract example जैसे कि देख सकते हैं a farmer agree to sell his product wheat or millers 6 months later when his crop ready at the price that both counterparts agree today. This is an OTC executed forward contract. It can be settled in cash or result in actually delivery of the wheat. The settlement terms such as quantity and quality of the wheat, that price and payment terms reference benchmark in case of cash settlement of contract decided by the counterparty at the time of entering into contract. These contracts carry counterpart risk if there either of the party in the trade fails to the honor of his side contract. Therefore, these contracts are generally entered between known party and lends on informal protection mechanism to ensure that the contract is honored. The forward market is commodity is several part of the India based on mutual fund trust and fundamental despite the risk involved. फ्यूचर में क्या है फ्यूचर में देख सकते हैं फ्यूचर स्टैंडर्डाइज एक्सचेंज ट्रेड टुवर्ड द कॉन्ट्रैक्ट फॉरवर्ड कॉन्ट्रैक्ट दी आर स्टैंडर्डाइज एज टू मार्केट लॉट ट्रेड क्वांटिटी quality, term of delivery, delivery date, cash settlement, physical delivery, etc. As these contracts are traded and settled on a stock exchange, clearing corporation provide a settlement guarantee on them. They are subjected to a strict requirement of the margin by the clearing corporation. Future contracts are available on the variety of the assets, including equity, indices, commodity, currency, and interest rate. Example में guys, wheat futures traded on the multi-commodity exchange (MCX) of India is following specific among the trading unit 10 metric ton, minimum size 500 metric ton, maximum position per individual 5000 metric ton, quality standard milk quality as per the specific by the exchange, contract being date 21 of the month. Delivery option physical delivery only, delivery date 20 of the month, and delivery center exchange approved by warehouse. Option क्या है ऑप्शन में देख सकते हैं an option is a contract that gives the right but not an obligation to buy or sell the underlying asset on the before a stated date and the stated price. The buyer or holder of the option pay premium and buy the writers or sellers of options receiving premium with the obligation to sell or buy the underlying asset if the buyer exercises his right. Based on the type of contract, option can be divided into two types: call and put. Call gives the buyer the right but not the obligation to buy a given quantity of the underlying asset at a given price or before the given future date. Put given the buyer right but not the obligation to sell given quantity of the underlying asset at a given price or before given date. Option can be transact both OTC market and exchange trade market. Example: Erwin buy a call option on the Nifty 50 index from Salim to buy Nifty 50 at a value of 11,000. 3 months from today, Erwin pay premium 100 to Salim. But it does this means Erwin is buyer of the call option. Salim is seller to the writer of the call option. The contract is entered into today but will be completed 3 months later on the settlement date. 11,000 is the price Erwin is willing to pay Nifty 50 3 months from today. This is called a strike price of exercise price. Erwin may or may not exercise the option to buy Nifty 50 at 11,000 on the settlement date, but if he exercises the option, Salim is under obligation to sell Nifty 50 at 11,000 to Erwin. Erwin pay Salim ₹100 as the upfront payment. This is called option premium or price of the option. On the settlement date, if the Nifty 50 is 11,200, this means Arvind option is in the money. He can buy the Nifty 50 at 11,000 by exercising his option. In this case, Salim earned ₹100 as a premium, but loses ultimately as he sell Nifty 50 11,000 to meet his obligation when the market price 11,200. On the other hand, if the settlement date Nifty 50 is 10,800, Arvind option will be out of the money, the expiry worthless. There is no point paying 11,000 to buy Nifty 50 when the market price 10,800. Arvind will not exercise in the option. Salim will pocket handed he collected as a premium. तो गाइस स्वैप क्या है? स्वैप में देखते हैं. A swap is in financial market in a derivative contract made between two parties to exchange cash flow in the future according to the pre-arranged formula. Swap help market participants manage risk associated with the volatility, interest rate, currency rate, and commodity price. Example: on borrowing, borrower have to pay quarterly interest rate, which is defined as the treasury bill rate on the date plus spread. This floating rate interest payment means that the actual obligation of the borrower will depend on what the treasury bill rate would be on the date each settlement of the interest obligation. The borrower, however, prefers to pay fixed rate of interest. He can use the interest rate swap market to get into the following swap arrangement. Pay fixed rate to the swap dealers every quarterly. Receiver T-bill plus spread from the swap delivered every quarterly. The swap is in the contract is that one party pays fixed rate to the other and receives a floating rate in return. The principal amount of this in interest will be computed is agreed upon between the counterparty, notional to the trade. Only the interest rate on this amount is exchanged on the each settlement date every quarterly between the counterparty. The borrower will use a floating rate that he has received from the swap market and pay the floating rate due to on his borrowing. These two legs are thus cancelled and his net obligation is payment of the fixed interest rate to the swap dealers. By using swap market, the borrower has converted his floating rate borrowing into fixed rate obligation. Trading, hedging, arbitrage, pledging of the shares. Trading or speculation is an act of purpose sells an asset in expectation of a gain from changes in the price of the asset over a short period of time. Trade or speculation seek to benefit from acting or information which bring about a change in price. The action increase liquidity in the market. Trade or speculation typically leverage their trading activity with borrower funds which marginify their gains or value as loss. Hedging. Hedging is an act of taking position in the financial transaction of offset potential loss that may be incurred by another position. A hedge can be constructed from many types of financial instruments including insurance, forward future contract, swap option, a hedge position, limitless loss as well as the gains. Since appreciation is one position is a spire of depreciation is the other option and vice versa. Arbitrage is simultaneously purchase and sales of an asset in attempt to profit from discrepancy in their price of two different markets, buying a stock in the spot market and simultaneously selling that in the future market to benefit from the price difference is an example of arbitrage transaction. An important point of understanding is that an efficient market arbitrage opportunity may exist only for a short period or none at all. The existing of arbitrage opportunity will increase buying in the lower price create market leading to the rise in price and increase selling to the higher price market leading to fall in the price, ultimately resulting to closing gap and eliminating of the arbitrage opportunity between two marks. Pledging of share क्या है? Pledging is an act of taking a loan against security by the investor. This investor is called pledger, and the entity who is giving the loan against the security is called a pledger. Security held in a depository account can be pledged hypothetically to a level of loan credit facility. When dematerialized security are pledged, they remain in the pledger's demat account, but they are blocked so they cannot use any other transaction. Pledge security can be unpledged once the obligation under pledge are fulfilled. In case of default, the pledge can invoke the pledge. Dematerialization of security market क्या है? Dematerialization is a process of the converting security held in physical form into the holding book into electronic form. In demat form, on investor shares are not distinguished from other investor shares, and these shares do not have any distinguished number, folio number, or certificate number. SEBI regulation requires a company making public issue of the share to enter into an agreement with all depositories to dematerialize shares so that investor can give the option to holding their shares in dematerialized form. Rematerialization क्या? Rematerialization is a reverse of dematerialization is a process of converting security held in electronic form into physical form. On request of investor, securities on the rematerialization are allotted in physical form with a distinction number in place. The security held electronically in book entry with a depository. तो गाइस चैप्टर ये समाप्त हो गया. इसमें कुछ सिंपल है. एज पर द SCRA, द टर्म सिक्योरिटी इंक्लूडिंग दिस ऑफ द फ्लोइंग गवर्नमेंट सिक्योरिटी डेरिवेटिव्स शेयर्स एंड स्किल ऑल ऑफ द अबव गाइस. Along with the SEBI and other regulatory under Company Act, RBI also regulated the equity shares market state whether true and false है गाइस. RBI को सिक्योरिटी नहीं, SEBI है जो शायद where the entry face value of the debenture in converted into equity shares is known as fully convertible debenture. Depository receipt which are issued in India listed on the Indian stock exchange with the foreign stock underlying assets known as IDRs. IDR जो कि इंडिया की कंपनी जो भी विदेश में लिस्टिंग होता है उसको IDR में रजिस्टर किया जाता है. IDRs मतलब बाहरी कंपनी जो भी इंडिया में रजिस्टर होता है IDRs. इंडिया कंपनी जैसे अमेरिका में होता है ADR होता है. ठीक है, तो चैप्टर समाप्त हो जाता है. नेक्स्ट लेक्चर में हम लोग देखेंगे टर्मिनोलॉजी इन इक्विटी एंड डेब्ट मार्केट. तो थैंक यू गाइस. लेटेस्ट वीडियो इन्फॉर्मेशन के लिए चैनल को सब्सक्राइब करना ना भूलें. थैंक यू.